Hi, I'm Miss Nix, your accounting professor, and I want to talk to you today about journalizing. Journalizing is a recording process that we use in accounting so that we can document what our businesses do. If you'll refer to your book on page 57, the first thing that it tells you to do is analyze each transaction. Now, I would like to extend that. When you analyze, it's going to affect at least 2 accounts, sometimes more. And by the way, if it affects more than 2 accounts, that's called a compound entry. So, we're going to analyze when we read the transaction. When you read the transaction, what I would like for you to do is ask yourself, was cash affected? Why? Well, we can all relate to cash, and we also know that if you pay, cash is affected, or if you receive cash, cash is affected. Knowing your normal balances of cash or any of your other accounts will be very vital to your information and to your knowledge in accounting. So let's think about it. If the book says you paid something, that means you're going to decrease cash. Cash has a debit balance in its normal state. So if you pay, cash is going to go down, so you're going to credit cash. If you receive cash, then cash will be debited and your balance in cash will increase. So you want to analyze. I'm not telling you that cash is going to be used in every transaction, but what I am saying is that sometimes it will help you in your mental process to think about how the problem or the transaction is headed. The book also says then to enter the information in the journal and then to transfer the information to your ledger. This is talking about journalizing. So turn to your books. Let's see, problem 2-2B, it starts on 87. Let me move this right here. Okay, this is what a journal looks like. It has a date column. It has your account titles, a reference column, and the debit credit column. Okay, Victoria Hall is a licensed dentist. This is 2-2B at the bottom of page 87. The first transaction says that you invested $20,000 in the business. Was cash affected? Yes, cash went up. So we know that cash is the debit account for $20,000. Notice I don't have lots of cents, C-E-N-T-S, I don't have any, or dollar signs. You will only use dollar signs whenever you complete the trial balance and the financial statements. You leave off all of that information, all that busy stuff in your other paper so that we can read it. Alright, where did the cash come from? The cash came from her investment, which is your capital account. Now, there's 2 ways that I've been taught that you put the name of the owner, which is V. Hall Capital. That has a credit balance, and you're increasing that credit account, so we're going to credit. Your textbook doesn't necessarily show the name by the capital account. So that, I guess that's going to be optional. That may be something new in this new textbook that they're coming to. But be aware that typically you should put the name of the owner by it so that if you have more than one owner, like in a partnership, you would have separate capital accounts and drawing accounts. Okay, now, in April 1st, we hired a secretary receptionist at the salary of $700 per week. Nothing has been affected by that transaction. And you do things every day that have no financial pending. So therefore, there'll be no transaction. And you can just put that on your paper. Okay, or you can just put a line through it. On April 2nd, we paid. Now ask yourself, paid, what does that mean before we even read the rest of the transaction? Paid means that cash was affected, and cash is going to go down so we're going to credit. What did we pay? We paid the office rent. All right. Rent is classified as an expense. Expenses have a debit balance, so that's going to be our debit. So we're going to debit rent expense and credit cash. Okay, for $1,100. Alright, now, I've already noticed that in this April 1, I left off one thing and I was fixing to put it in this one, and that is an explanation. An explanation is just some type of note so that if someone else is reading this journal, they'll know what you did. So, for instance, back to April 1st when we invested that money, you might just put initial investment. In this class, your explanations are just general information. Just the fact that you put it and remember to put it will be important. However, whenever you go into the business world, your explanations are going to be vital because you're going to have partners of a firm or CPAs or other people, Mrs. Nix, looking at your work. And we're going to want to know what you've done. So if you have reference numbers and check numbers and things like that, that will help. For the back to the rent, when we paid rent, our explanation you can put then is just paid office rent. Also, you'll notice I haven't done anything right here on the reference. That is because you will only put something in the reference when you post to the ledger accounts, which is explained in the next video. Alright, let's do one more transaction. On the 3rd, we purchased dental supplies on account from Smile Company for $4,000. Was cash affected? Well, it didn't say that we paid or purchased it with cash. It said we did it on account. When you purchase anything, you're either going to pay for cash immediately or pay it later. If you pay it later, that is a payable. So, cash was not affected in this transaction. What was affected is accounts payable. Accounts payable's normal balance is credit, so that will be the credit account. What did we purchase? We purchased dental supplies. For $4,000 by accounts payable. $4,000. And what I'm going to do on this explanation is I'm going to put Smile Company, because that tells me where I purchased. Now, what I want you to do is notice this journal. Notice how all your debits are lined up on this margin, nice and neat. Credits are all indented, nice and neat. And then you have another indentation for your explanation. It needs to look as close to this as possible because it makes it so much easier to read. When you have a transaction that affects more than one account, that is called a compound entry. Let me look and see if this particular problem had any compound entries in it. And no, it did not. So, what that might mean is, let's just give an example of when you purchase these dental supplies. Let's say that you bought these dental supplies, but you paid $1,000 down in cash, and you're going to put the rest on account. What's going to happen then? And I'm going to just use this journal page. You're still going to have the dental supplies of $4,000. However, you paid $1,000 cash, so you're going to credit cash for $1,000. Okay, let me go out just a little bit more so you can see. And then you're going to also credit accounts payable for the remainder, which was $3,000. All right, notice debits to the right here to the margin. Your two credit accounts are lined up. This is called a compound entry. And then, of course, you want to put your explanation. Okay, so that's what that will look like. And let me bring it up closer so that you can see some of the specifics of this. Okay, there it is. That's the compound entry. And there's the amounts. Make sure whenever you are analyzing and journalizing your transactions that you use the account titles that are given to you in the book. Each account title is specific to the type of business. For example, if you work at Howard College, we have different types of tuition. We have tuition fees. We may have different types, but we also have building fees, and we have parking fees and other types of revenue. On the flip side, we have different types of expenses. Those are set by our controller, and in the business world, those are set by whoever's in charge of the books. You will always want to use those titles. In this class, your textbook will give you the account titles, so please use exactly what the book gives you. I hope that this part of the information of journalizing has helped you. Stay tuned and go to the next video on how to take this information in the journal to the trial balance.